Good morning, this is Dr. J from Business Agent, your daily dive into global business, startups and technology. It's 20th September and we've got stories today you'll want to see. Big AI investments, some serious corporate self-correction, and yes, Meta and Apple are facing some headwinds. Let's walk through the wins, the losses, and what it means going forward. Story 1. NVIDIA's $500 million wave bet plus. UK AI push. First up, NVIDIA is set to invest $500 million in UK self-driving startup Wave, which uses camera-based machine learning rather than pre-mapped environments. It's part of NVIDIA's broader $2 billion commitment to UK AI infrastructure, a strong play in autonomy and a marker of confidence in the UK's AI ecosystem. Story 2. UK's borrowing pressures rise on the economic front. UK public borrowing hit 18.0 billion in August, a 5-year high. Fiscal year to date, borrowing is already 83.8 billion. The markets are watching closely. Higher borrowing tends to mean tighter fiscal policy, which could mean tougher times for business investment, tax changes, or public spending constraints. Story 3. Meta's metaverse struggles. Meta's metaverse experiment remains under pressure. The Reality Labs division is losing money, 4.2 billion this past quarter, contributing to total metaverse losses north of 60 billion since 2020. Quest sales are down, and Horizon Worlds has failed to gain mainstream traction despite heavy investment. Meta leadership has acknowledged 2025 is critical. It's a make or break year to show that their XR and metaverse investments can move from vision to viable business lines. They're also pushing new tools to revive interest. AI-powered content creation in Horizon Studio, streaming efforts via Horizon TV, and upgraded social hubs in the metaverse. But the spending remains high. The returns are still uncertain. Story 4. Apple Vision Pro. Ambitions versus reality. Meanwhile, Apple's mixed reality ambitions are hitting friction. The first-gen Vision Pro headset has seen production sharply curtailed, possibly discontinued entirely due to weak demand. At its $3,500 price tag, it's far beyond what many consumers are willing to pay, especially with cheaper alternatives on the market. Apple is reportedly working on a more affordable AR/VR device for the future, but right now it looks like they'll have to walk carefully to avoid overstock, customer dissatisfaction, and reputation risk in a hardware category that's costly to get right. Story 5. Big investments and AI's growth trajectory. On the brighter side, investment frenzy in AI continues. Figure AI raised over $1 billion while pushing its robotics and humanoid offerings into wider commercial scope. Mistral AI closed a 1.7B Series C, reinforcing Europe's ability to compete in large model development and infrastructure. Cognition AI raised $400 million betting on agent-style workflows, that is, AI systems that can orchestrate multiple tasks autonomously. These moves show that while some hardware and XR bets are cooling or recalibrating, AI software, infrastructure, and scale are still firmly in investors' crosshairs. Story 6. Market sentiment and defense moves. Investors are getting more defensive. US equity funds saw significant outflows as traders expected rate cuts from the Fed, but the actual moves have left them cautious. Valuations have been stretched in many AI names, so profit-taking is natural. Meanwhile, companies like Meta and Apple adjusting hardware expectations is a sign that the hype cycle for certain emerging tech is now meeting the harsh light of business reality. Some smaller but important updates. Meta Connect 2025 revealed new smart glasses, Ray-Ban Meta Display, Oakley Meta Vanguard, tools for content creators, and improved AI-powered world building. The company is clearly pushing to stay relevant in XR, even as some of its platforms lag. Apple's more affordable Vision product in development is seen by some analysts as crucial if Apple wants to break past the early adopter niche. Here's what to take away. Big AI investments are still flowing. Hardware and immersive tech are under pressure, expectations being reset. Meta and Apple have highlighted what can happen when cost, price, consumer appetite, and content don't align. Economies like the UK are wrestling with fiscal limits, even as they try to capitalize on technology opportunities. Thanks for tuning in to Business Agent. If you found this helpful, share, subscribe, hit the bell. I'll be back tomorrow with more, both the high-flying and the hard truths. Stay sharp out there.